Thank you for joining us today. We have a special guest today joining us.
Hi, how's everybody going? I'm Jose España with Cardinal Financial.
Now, today we're going to be talking about interest rates and buy downs. That's the hot topic in our real estate market. So Jose, tell us a little bit about what are buy downs?
Buy downs right now, it's the one way that we're trying to combat the higher interest rates. It's really a temporary way of trying to help buyers feel more comfortable, more confident in trying to purchase their homes as we try to get people into the market.
Tell us a little bit about what the criteria is for that, or how we can qualify for one of those programs.
Yeah, one of the most important things to remember is clients still have to qualify at the fully indexed rate, which means that whatever your true interest rate is, you still have to qualify at that before we can get you to really choose the option of the buy down. So the most important thing is making sure the credit score is there. There really is no overlap. You're eligible through conventional loans, FHA and VA loans. So all those qualify for any potential buy down if we want to choose it.
That makes it really nice because it means that everybody can qualify go into the option of trying to qualify for that program.
Correct. Yeah, and there's no restriction on, like, I know in Nevada we have obviously Reno Sparks, we have rural surrounding areas, so there actually is no map or any requirement that way. It's just very open to again any conventional FHA or VA loans that we can use the temporary buy down for.
Tell us about the different buy down programs that a buyer might be interested in.
Yeah, for sure. One of the biggest conversations we have with all our borrowers is it the right choice for you? One of the key factors is we do want to try to get some sort of seller and or builder credit to help pay for the buy down. And what it is basically they're going to temporarily help you pay for your mortgage month to month. So what they do is we get some sort of a credit that we can use it for the buy down, and then that amount gets distributed monthly to your mortgage. So basically they're paying a portion of your mortgage for you, for whether it's currently Cardinal's offering a 2-1 buy down or a 3-2-1 buy down. And that's what that is we're going to create an account for you where the seller or the builder has given us a credit, and they're going to be paying a portion of your mortgage for either the first 3 years or the first 2 years, depending on which one we choose.
Perfect. We're going to cut and show you a perfect example of this.
All right, guys, so as mentioned, the biggest example I wanted to show you guys today is this 3-2-1 buy down program. So what you're seeing on your screen right now is it goes over the basic concepts of how in the first year, again, seller and or builder are going to give us a credit to try to temporarily buy down or help pay for a portion of your mortgage. First year is 3%, second year is 2%, and then the last year is 1%. As you see on the table, it goes over what your interest rate would look like, what your principal and interest payments and the differences are. The biggest thing to keep in mind is if you look at that first year, on a loan amount, again, example, is $356,250. Your fully indexed interest rate is 7.125%, and your principal and interest is $2,400. Now, with the first year in the 3-2-1 buy down, your actual interest rate is 4.125%, and your principal interest goes down to $1,727. That's a savings of $673 a month. The biggest thing to remember is this is just a temporary buy down. It is not an adjustable rate mortgage. You do have a fixed interest rate, and so to kind of solidify everything, I go back to it. The way you got to look at it is the seller and or builder is helping pay a portion of your mortgage for the first 3 years.
Another thing that I do want to mention with the 3-2-1 buy down is that the amount that you get credited from the seller or builder, if it goes unused, so again, the goal is to right now combat the higher interest rates. The idea is that if we can refinance in the near future when the rates hopefully go back down, any unused portion of the buy down actually can get credited back to the buyer when they refinance. So just something important to keep a note of.
Thank you so much for providing us this great information about the buy down program. So stay tuned, like, subscribe, and follow us as we continue to give the latest information with rates, what's happening in real estate, and getting you into your home of your dreams.